As a novice in the Forex market, knowing and following these steps will give you peace as you journey to become the Forex trader you've inspired to be. 1. Understand that trading is not a get-rich-quick scheme. 2. Understand that learning and understanding the markets can take years. 3. Dedicate yourself to learning the markets. 4. Get as close to other successful traders as you can. Probably online, and engage with their post, and, if possible, physically. 5. Start by finding a good winning strategy with 40, 50, or 60% win rate and specialize in it. 6. Pick one pair, know its pattern, and learn it inside out before expanding your focus. 7. Backtest the strategy and its pattern performance historically, going back several years, to know its effectiveness in different market conditions, including various trends, volatility, and economic cycles. And also, future test it using current market data. This will help you refine your strategy, identify potential flaws, and build confidence in its performance. 8. Write down your entry confluence and trade only when you see your entry confluence. 9. When backtesting, try to know the effective support and resistance levels the market respects mostly, and also how does price act when it hits these levels. 10. The chart and candlestick patterns it creates on these levels before moving in either direction. 11. Never fear the markets. 12. Never fear making a mistake. Rather, learn from your mistake and see it as your tuition fee to the market. 13. If you do make a mistake in your entry, don't complicate the position by trying to hedge it. Just look for a better way to get out of the market. 14. Stay actively involved with the market. Don't just sit passively in front of the market staring at charts. Make sure you are active and learning from it. Note: successful traders construct their own entry point and figure charts that work mostly for them, and they stick to trading what works for them. They keep the same routine day after day as they have planned. 15. Develop your own trading plan that fits your personality and stick to it. 15. Develop your own routine for backtesting to understand the pattern that the market is creating. 16. Never be greedy. It's okay to leave money on the market. If you can't get in at a favorable price, the area which you've predicted to enter the market, let the trade go and start looking for the next trade. Finally, remember that a trader is someone who does his own work, has his own game plan, and makes his own decisions. Only by acting and thinking independently can a trader hope to know when a trade isn't working out. If you ever find yourself tempted to seek out someone else's opinion on a trade, it's a sign that you should get out of your position. Believe in yourself and in your strategy. Stay active, stay engaging. Keep practicing. Keep learning. Profitability is the goal.